morning, good afternoon, good evening, traders from across the globe, and welcome to the 1097th edition of Short-Term Trading Live with Oscar Carboni, and that would be me. Good evening, traders. This video is being filmed on Sunday night for Trading Sunday through Monday, October 28, 2013. A lot of stuff on the board. Before I get into it, let me just say futures trading can be extremely risky, can cause substantial financial loss, is not suitable for all trading accounts, and if you do not recognize that a stop can be your best friend, you don't know anything about trading. Always place stops, always place them first. If you do not know why, come on down to livewithoscar.com. I will explain to you why we place stops first before we trade. All right, traders, so what's on the board? Well, the markets look great here. I mean, you can find a lot of analysts out there that will show you some big trend lines that we're about to run into, and they say it's getting toppy up here. I say, no way. I'm going to show you those trend lines. I'm going to show you why we continue higher in the emini S&P. Now, interesting developments. Metals. What we really have right now is a replay of a scenario from a year and a half ago, maybe even last year. You had bonds, S&P, and gold all going up at the same time. Now remember why that was happening. Up until recently, you had bonds going up because of the big fear that what if what the Fed is doing doesn't work. So over the last few years, bonds went up with the stock market because the Fed was backing the stock market. Gold continued to go higher as well with bonds, with the S&P, the gold, the three of them, because of the fear factor. The fear factor is now out of the markets. We don't really think a big crash is going to come again. We're getting back on our feet. So is Europe. So here's what I think. I think you're going to get bonds to move higher. I think you're going to get S&P to move higher. And I think gold's rally will peter out shortly and start to head back down. Now, you know, a little bit of fundamentals here. We know this. It's really unlikely that Ben Bernanke is going to do anything with interest rates before he steps off. He took the economy when it was at its worst. He brought it up to a beautiful level. He needs to step off as champion now, right? Like a champion boxer that just won the championship match, and then he leaves, and then he's the champ for the rest of his life. He's not known as the washed-up guy that came back and lost a few rematches. He steps off as champ if he's a boxer. Well, if Bernanke's smart, we know he is, he's not touching rates until Yellen gets in, and that's not until first quarter next year. What does that say? Bonds go higher, S&P goes higher, and there's really no need for the gold to continue. However, I do have a green OMNI for gold for trading on Monday. We are day traders, so as far as Monday is concerned, we do expect higher in gold. But I think that you'll get the three combination there, right? You'll get the S&P, you'll get the bonds, you'll get gold, but gold will taper off after a little bit of time. That's what I'm seeing when I read the charts. Now, traders, for a couple of stocks, let's just turn to the board for a moment. The ES is looking fantastic. Technically, we're about to take out some major weekly trend lines. And as far as stocks are concerned, you know, I've been showing you Tesla. We were blessed. We called the high in Tesla. It started to break. It did break down. Now, it went up a little bit. I am here to say, traders, I am getting more sell signals from OMNI. It's telling me Tesla may go up a little bit on Monday, maybe even Tuesday, but look for the downside more so than the upside over the next few days leading into Friday, maybe this week. So Tesla looks like it could get down to 153. We'll see. One other stock that jumped out at me, although it doesn't move a lot, so there's not a big play in it like there would be in Tesla, that is Yahoo. Yahoo is reporting this week, and the chart tells me it looks like it may try to get down to 29.5. Now, it's only trading in the 31, 32 area, so it's not a big move, but it's a big move if you got a big position on. So I just thought I'd show you that Yahoo is on my sell watch list, and Tesla, even if it rallies a little, maybe tomorrow or the next day, I'll give you some technical reasons why that bad boy is going into another sell zone shortly. So watch out for Tesla. Traders, I want to show you some charts very quickly. These charts are going to show you how fantastic the emini S&P looks. Now look, every market that goes up has pullbacks. A pullback does not mean a bear market. If it has a pullback, so be it. We are buyer of dips in the emini S&P. And, just keep in mind, Tesla and Yahoo, I'm not going to bother to show you charts on that now, but I will show you charts on that as the week progresses. Traders, with no further ado, let's go look at some charts. Traders, the first chart I want to show you is the E-mini S&P. This is a weekly bar chart, so every one of these green lines represents an entire week's worth of trading. This goes back to 2008, then the lows that we set in March of 2009. Since then, we've come all the way up. Now, interesting, look at this wonderful red parallel channel that we've been in. And you would think you hit the top, you go to the bottom, you hit the top, you come off, you hit the top, you come off. You hit the top, you come off. You hit the top here, you should expect to come off. But my work says no, that is not what's happening. We are going to take this top out and keep going because there's a new channel morphing right here that we are now in. And let me blow this chart up for you, the very same chart. I'm going to zoom in on it now and show you the channel. Traders, this is the new channel developing on that very same chart. We are about to take this out, and we will, and we're going up here. Now remember, I told you I have an 1803 projection for the E-mini S&P this year, the year of 2013. We had a 1720 to 1740 projection. We took it out. I mean, could you imagine we got there before December? Traders, just to let you know, we were trading at 1480 when I made this projection. 1480. So we've made that, and now the new projection for the year is 1803. But there's more charts to convince you why we should go higher. Traders, do you remember this chart from last week? The beginning of last week, I told you this was tonight's masterpiece chart in the NASDAQ. None of this was here. We were down here, and I said that we have a target of 3,400, and we are going there this week, meaning last week. Look what we did. We got all the way to here. I mean, is that technical analysis firing on all 8 cylinders or what? That's your NASDAQ, and that line's going to get taken out as well. Traders, the Dow Jones Transportation Average on a daily bar chart now. This is for trading what's going to happen on Monday. You see this chart, I've shown this to you before last week. I pulled this chart and I said, look, we hit this, we came off, we hit this, we came off, we hit this, but this time we're getting above. That was the beginning of last week. 1, 2, 3, 4 days all above since I showed you that video. Your target is up here, nice and high. Traders, your E-mini S&P for trading on Monday, tomorrow, Sunday night, tonight through Monday. One of Oscar's Oscarisms here, an F flag. And those F flags usually last for quite some time. So I'd expect that we stay in the F flag and just keep working our way higher in the E-mini S&P. So this is for trading tomorrow, or Monday I should say. Now let's address the metals. Traders, you know I've been a bear in gold for some time, and gold has certainly come off for quite some time. But recently I've been giving buy signals out to the OMNI and metals, and let me show you what's going on. Here's silver from 2012 into 2013, all the way through 2013, right to where we are today. Silver is putting in what I call an inverted head and shoulders, which many times signifies a bottom. Now, we've had this channel, we got out of this channel, got above it. This is the exact same parallel channel, so this is basically an Andrews pitchfork right here. We're just about to hit the top line of that channel, but even more interestingly, in the form right here of an inverted head and shoulders. So we've got a shoulder, left shoulder, a head inverted, a right shoulder, multiple head and shoulders inside the right shoulder, and about to test a major trend line. Let me blow this very same chart up for you now. Let me zoom in on that right shoulder only. You had a head and shoulders and it worked into another head and shoulders. You went down. Now you've got an inverted head and shoulders, but look what's happened here. You've come out of the inverted head and shoulders, which is bullish to begin with. This is a bullish signal. And now we've got a bull flag right here. Traders, undeniably, this is a bull flag. So we expect silver to go up higher tomorrow. And that brings us to gold, and we want gold to go higher tomorrow. There is an upright head and shoulders in gold. Now, this would be a bearish signal, right? Now, silver and gold are different markets. However, Right now, you've got gold right here. This is where it is. It's getting up out of the right shoulder, and I'd expect it to get at least up here and do what I call a head test of the head and shoulders. That brings gold to 1,400, if not higher. We're day traders. We're only looking for a day trade, so likely we'll be buying dips on Monday for gold. Traders, pull your own charts, do your own homework. Never, ever accept anyone's technical opinion without doing your own chart analysis first. So, traders, you've seen the charts, and there is my technical argument for why we've got a fantastic-looking ES, technically over the next few weeks, even daily for tomorrow. And just keep in mind this Tesla, we'll see. I'll show you tomorrow on that in the next day. All right, traders, one thing I'd like to address that I've been very quiet about in these YouTube videos, but thousands of Omniacs around the world have heard about this since January of this year. But January, I posted a target for Omni this year for the emini S&P. That target was 1720 to 1740. We were trading at 1480 when Omni gave us that target, and we nailed 1720 to 1740. How about a round of applause for that? Go, Omni, go. Now, I was sitting on Neil Cavuto's set, and he said, Oscar, what do you think? We were trading about 1485, and I said, this year we could probably see about 1720, and his eyes went. He was like, what? And, you could tell he didn't believe me. Gave me the big eyebrow raise, and that was the end of the interview. Neil Cavuto, are you going to invite me back on? The same year we hit 1720. We actually hit 1740, the upper end of my target. So, Neil, I'd love to come back and sit with you and show you how I came up with that projection and give you next year's. That is up to you, my friend. Love your show. Next. Traders, we have raised our yearly target. Now that the 1720 to 1740 target has been hit, we have an 1803 yearly target this year, emini S&P. Remember, the Omni's giving you this. The Omni gave you that when we were trading at 1480. That is an amazing, amazing long-term call. If you've been following me since 2006 when I started presenting you with YouTube videos, we've made a long-term projection every year, traders. You know what? There's only been 1 year that Omni didn't call it almost perfectly. And that year the market went up, went down, and settled unchanged from where it started. So there was nothing Omni could call. It did make a higher projection. It never got there. 1 year. We were not right, not wrong. Every other year we have nailed it to the number. Go, Omni, go. So I will give you next year's projection when we get there. But this year's projection, we will trade 1803 according to Omni before the year's over, and not as a high. Let me just continue to speak. Right now, if we stay on the path that we're on, even with pullbacks, Omni sees this whole thing the way it's been going since 666. Omni sees this whole thing getting above 2100, maybe to 2200 ES before this finally starts to look like a bubble. That's a big projection. Now, I'm not saying that's next year's projection. That's the whole thing. If you remember the last time we had a run like this, it was 2001 or 2 all the way to 2007, right? We're at 2013. 14's coming in. So we need to get up there. We need to get up there fast because it is starting to get a little old. But with Uncle Ben standing there with $85 billion a month, we're not going down, not for some time. The charts tell us no. The fundamentals tell us no. I'm here to tell you we go up, even if we have pullbacks. Traders, I'll see you at livewithoscar.com. If you like these videos, please subscribe. You are right here at YouTube. So just click the subscribe button above, and you will then get an email every time I put out one of these videos. Traders, remember, this video is for trading on Monday. That would be the 28th of October. Come on down to livewithoscar.com. Come into my free trading room and allow me to help you become a better analyst, which should, in fact, make you a better trader. With no further ado, I'm getting out of here. I'm running back down into my office. Traders, always keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. trend lines. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.